Hello, everyone, and welcome to the show today. So today we're going to be diving into talking about rock solid business funding options for risky businesses. We're going to dive in. We're going to talk a little bit more about what industries are deemed to be risky per lending standards, and also talk about different funding options you can get for those industries. We'll talk about some general funding options. We're even going to talk about the specific funding sources you can go to be able to get funding for your business if you are in a risky industry, or if there's other factors that make you higher risk. So for those of you that don't know me, my name is Ty Crandall. I'm actually the CEO here at Credit Suite. At Credit Suite, we help businesses get capital. We do this by helping improve your fundability so you can meet lending criteria before you even apply. We help you build business credit for your EIN that's not linked to your personal Social Security number. And we help with accessing all kinds of loans and credit lines all in one place. So during today's webinar, you are going to know everything or learn everything that you need to know to be able to obtain financing for your business, even if you are in a high-risk industry. So by the end of this today, you will have a bunch of different options that can work for you to get money for your business, even if you're a startup, even if you think that you don't qualify for it now, you don't qualify now. So what are risky businesses? Well, they're defined by the SIC code, the Standard Industrial Classification Code, and the NAICS code, the North American Industry Classification Code. So the reason that there are two different ones, by the way, is that the SIC was the old system. And the SIC had minimal categories of where it actually placed industries. So the government came up with this new NAICS system that you're going to start basically seeing replace the SIC system, which basically gave us a lot more categories to categorize what industry, or categorize the industries that businesses have. So again, as I mentioned, the SIC isn't gone yet, but it is being replaced. Industries can be either restricted or high risk, something you need to know. So lenders and credit issuers use these NAICS codes to do typically one of those two things. If they see that you are potentially higher risk, they're either going to put you into a restricted field, which means you're not able to get financing from them at all, or they classify you as being high risk, which means you're still able to get money for your business, but again, it's just at worse terms because you're deemed to be a high risk industry. So normally restricted and high risk industries have some things in common. They may be high risk of injury on the job, or the industry may engage in a lot of cash transactions. Okay, this is true regardless of the safety record of a particular business or the majority of its transaction types. Now, again, this isn't all of the reasons that one is deemed to be high risk. A lot of lenders will classify you as high risk based on individual performance that they've seen. So we see a lot of lenders in the cash flow financing industry, for example, that will classify industries as high risk just because they've had higher default rates internally with those industries. We see entire lending sectors all at once look at industries as high risk because those industries have a higher risk of default. So an example is restaurants. Restaurants are deemed to be very high risk because the failure rate of restaurants is exorbitantly higher than what we see with other industries. So a lot of the time when we look at what considers a business to be high risk, it might be that you're just generally dealing with financial services. You're dealing with a lot of cash. You're dealing with on the finance sector where they're not comfortable. Or again, maybe you come from an industry as well that just doesn't perform as well in financing. Or with financing being paid back as it's supposed to be paid back. So according to the SIC, the following industries are high risk: auto, recreational vehicle or boat sales, travel agencies. Okay, and here's a reference code that you can go to, referenceforbusiness.com, that will give you some of those specifics. You also energy, oil trading, petroleum extraction or production, pawn shops are there as well. Okay, so even other industries as well. Some of the most common ones I see are financial services. So this means if you're a real estate agent, if you're a credit repairer, if you're an attorney, if you're an accountant, if you're a mortgage broker, if you're do what I do, dealing with business credit, we're all deemed to be high risk because we're dealing with financial services. So I see a lot of people in those sectors, for example, real estate investors, that think, hey, everything's against me because I'm a real estate investor. I'm looked at high risk. Well, you're looked at high risk because you're dealing with financial services of some sort. So that sector is very large as well. And again, I've given you the reference for business.com so you can check your own industry because there's a lot of industries on these restricted lists. So according to Hoover's, the marijuana industry is coded as follows: SIC code 5999 NAICS code of 453998. So this is another budding industry, no pun intended, that is also deemed to be high risk, because again, this is a brand new sector. This whole sector was just created. So we're still trying to get a gauge for performance on loans, on credit cards with this industry as a whole. But again, just because you're in these industries doesn't mean that you're not able to get financing. It just means that this is what we're going to dive into today to teach you where you need to go to get financing, okay? So the SICcode.com disagrees. They say the cannabis industry should be coded this way with a little bit of different SIC codes. But again, it doesn't really make a specific difference of whether it's one code or the other. As a matter of fact, when you pull your business credit reports, you'll oftentimes see that you have many SIC or many NAICS codes associated with your industry. My advice to you is to, in the beginning, if you haven't already done so already in your business, pick your SIC, pick your NAICS code. Do not let a lender, credit issuer, or anybody else do this for you. So let's use Credit Suite as an example. Everything we sell has to do with our software, okay? We help people get financing, we help people get loans and credit lines, but what we sell as a product is our actual business credit builder. It helps people build business credit and set up their credibility and everything to do with getting money, right? So when we set up our industry, we understand SIC codes, we understand NAICS codes. So since we sell software, we are a software company. So we made sure that we have an NAICS and an SIC that indicates that we are a software company. That is the codes that we use on our tax returns. It's the codes we use where anybody asks on any application, NAICS and SIC codes. Here's why this is important. There are things happening behind the scenes, and if you follow me, I'm talking about all the time, like LexisNexis. So you fill out an application, okay, for a loan, let's say. The lender goes to the lender. The lender gets all of your LexisNexis data, okay? They also get all the small business financial exchange data. The small business financial exchange data is all the data from the other lenders you've ever had a relationship with and applied with. So what happens is if you don't from the beginning control your SIC and NAICS, then lenders are assigning one for you. Then when the new lender, then you finally figure it out as you come in and say, this is the NAICS that I want or SIC that I want. The problem is that lender's going into small business financial exchange, they're pulling out other data where you've had different codes and they're associating your business with those other codes instead. So again, my advice, make sure you pick the code that best fits your industry. Use that same code everywhere it's ever asked for, especially on all loan applications. So all that same data goes into SBFE, the Small Business Finance Exchange. We want to make sure that all that same data goes in there, so then other lenders that pull up your data from there will see that same code. The same on the tax returns. So for example, when we had an SIC code we didn't like and didn't agree with on our business credit report, we just went to a reporting agency and disputed it. And they came back and said, yeah, sorry, this is what we got from other sources. We went back to them and said, sorry, it's not. Here's our tax returns. Okay, here's the information from the Secretary of State. Here's the information from the other reporting agencies. Everybody has it right except for you, and they changed it. So again, choose what you want that's the best fit for your industry, and then always use that. That'll help you no matter what industry you're actually in. So it's important to note that when it comes to getting money based on these risky SIC codes, over 89% of business applications are denied by the big banks, almost 9 out of 10. Now, keep in mind, this is of all the people that actually applied. Think about how much documentation is even needed to go into a big bank and get a loan. All the people that gathered all that documentation and went into the bank, of all those people, nearly 90% of those applications ended up getting denied. Not to mention all the people that never even applied because they knew they weren't going to get approved. So high-risk industries are subject to stricter underwriting guidelines, and restricted industries can prevent you from getting money at all or an automatic decline just based on your industry. And again, this is why I say it's so important to not choose a name that indicates you're in a high-risk industry. Because when you do that, you're automatically going to face scrutiny even when you're not supplying your SIC code. Hey, we are a victim of that, and we did that by choice. We want credit in our name, Credit Suite. We want people to know that we deal with corporate credit. But the problem is that whenever we apply for even a credit card, that name triggers an alert that makes it more difficult for us to obtain merchant accounts, bank accounts, loans, credit cards, and credit lines. So again, even the name can indicate you're in the high-risk industry, something to keep in mind. Now, venture capital is not an option unless you have a truly groundbreaking product or service. So a lot of people say, well, what if I go to private investors? What if I go to equity investors instead, like venture capital or angel investors? Well, these guys are really only there unless you have some groundbreaking product or idea. Okay, they want to see quick returns. They also want a chunk of ownership that's pretty large from your business. Okay, so again, what they're not looking to, angel investors and venture capitalists, they're not looking to invest in pawn shops and laundromats and typical businesses. They're looking to invest in the future Airbnb, the future Uber, cutting edge concepts that are huge risk, but huge reward if they actually were to pan out. So again, if you're in a typical or standard industry, these just are not going to work. This kind of money is not going to work for you, whether it be angel investing or private money. So what will work? Well, one of the best programs we've seen is called unsecured business financing. Now, this can provide some of the highest amounts of money that you're ever going to get if you're in a high-risk industry, especially if you're a startup. You get 0% credit lines with stated income. There's no doc. There's no financials. There's no bank statements. There's no tax returns needed. And you're getting multiple credit lines that report to the business credit reporting agencies. So you're building business credit at the same time as getting financing for your business. Okay, and that will help you in the future get business credit cards without the personal guarantee. Now, in this case, you're going to need a personal guarantee because you haven't built your business credit yet. But these will help you build business credit that will open up more opportunities for you to get no personal guarantee revolving credit lines and credit cards down the road. Now, you can usually get about 5 to 8 credit lines, which is about 5 to 8 times the amount of money that you get on your own. Okay, I mentioned that you're getting able to get 0% rates. Okay, and it's usually 5 to 8 times the amount of money that you're able to get if you were to go out and apply, for example, a credit card or credit line on your own. The other cool thing is that there's no impact on personal credit when you're using this type of credit because it all reports to the business credit reporting agencies. So you can max these credit cards out and they wouldn't adversely affect your consumer credit as if you got business credit cards that do report on your consumer credit reports, which many of them do, right? One of the most common credit cards in the business world is a Capital One Spark card. And with Capital One Spark card, that reports to personal and business. So you're going to need about a 700 FICO score to qualify for this program, or a guarantor that does. So maybe mom, maybe dad, maybe grandma, grandpa, maybe friend, maybe potential investor. Any of those people can serve as guarantors. And again, that's important because over 75% of business owners get money from family and friends. Well, it's easier for them to be used as a guarantor than to get cash, especially since the credit you're getting only reports on the business credit reports, not their personal. Okay, so again, you're able to get this kind of financing based only on personal credit. That's why this is no doc financing. That's why this works for startups. This is where you're able to get up to $150,000 in financing based, even as a startup, only on credit quality. How much money you'll get with this program really depends on the limits of your current credit cards. So if the credit card limit you have now is $20,000, you're usually going to get about 5 times that amount of money. Okay, so if it's $10,000, you get $50,000, right? If it's $20,000 is your limit, you're able to get about $100,000 in financing, about 5 times the amount of your highest limit. This is the most money I've ever seen startups be able to get. So if you have other credit cards that may work for you as well, range from $10,000 to $150,000. Okay, this is the same program. No consumer reporting, as I mentioned, excellent personal credits needed. Low inquiries are needed to get approved as well. Okay, so that being said, there's also business credit accounts as well. So you can also get $10,000 to $50,000 on individual business credit cards that don't require a personal guarantee. These are report to the business credit reporting agencies, but it takes about 6 months to build your business credit profile. So this is when you are getting vendor accounts like Uline and Quill and Strategic Network Solutions. That builds a business credit profile, builds a business credit score. Then you start getting revolving credit cards. You start getting Home Depot and Lowe's and Sam's Club and Costco and BP and Apple. Those are what we call retail credit tier. That's where you start getting retail credit. In most places you buy stuff out now anyways. You can get Amazon at that point, get Walmart at that point. I mean, these are the stores you're probably buying most of your supplies, inventory, things from anyways. Okay, then you get in 6 months or less, depending on if you're working with an expert or not. If you're not working with somebody who knows what they're doing, this is going to take a little bit longer. But then you're able to get auto vehicle financing. You're able to get Visa card, MasterCard, what's called cash credit, less than 6 months into this process. And personal credit's not used for the qualification. So what I like about business credit is, one, it's not industry specific. So even if you're in a high risk industry, even if your name indicates you're in a high risk industry, you're still able to get approved for a lot of these high limit business credit cards. What do I mean by high limits? The high limits are about 40 grand. So our clients get to about 40,000 on revolving credit at most major retailers. And then when they're dealing with local vendors at that point, they're getting 150, 300,000 in individual credit lines with local vendors. But most major retailers like Amazon and Walmart, you're able to get limits of about up to 40 grand when you're building business credit is what's possible, okay? And again, normal credit card rates, 0% in a lot of cases for those as well. Now, again, you're also able to get financing and loans that are not coming from the big banks. The big banks are a problem. Okay, the big banks like Bank of America, Chase, Wells Fargo, love these guys. But the problem is they're government insured. So they're required by law to be very conservative on their risk. So because of that, you never want to walk into those banks unless you have good credit and financials for years and you have collateral. They're just not going to touch you unless you have all those things. But there's a lot of loans that are available outside of the big banks through alternative lenders. And these are ranging from about 25, 50,000, sometimes even higher. Okay, you can even get 100,000 in initial funding, even as a startup lending. Okay, and peer-to-peer lending is available as well. So these are coming from alternative lenders. These are coming from peer-to-peer lenders. Peer-to-peer lenders is the new wave of financing in the business space. This is where you have private investors are contributing money into platforms like Lending Club. Lending Club pools together the money from many investors and then lends it to you. So this is a new wave, these peer-to-peer lending where individuals are contributing money that's getting lent out instead of lending institutions. So some good options for you there as well. So let's look at Diamond. Diamond Business Loans. They're a direct lender that offers unsecured lines of credit, term loans. Let's talk about the difference of these. A line of credit, what it sounds like. Most revolving credit, like credit cards and credit lines, are called unsecured. That means you don't need collateral to be able to qualify. You're also seeing term loans. What term loans means is you're getting longer term loans. You're getting 3 years, 5 years, or longer. Okay, so the longer the term, lower your payments. This is why you always want to get as long a term as you can get. Okay, equipment leasing and financing they offer. And they serve a variety of industries, including established and startup cannabis businesses. So if you're in that cannabis industry we talked about, if you're in another high-risk industry, Diamond Business Loans might be the best place for you. Even real estate funding, even when you're in that, even when you're a real estate investor, you're able to still get financing. 25,000, 150,000, 1 year terms, about 5.9% plus prime. You have to look to see what the prime interest rate is to figure that out. A 5 year term of 19.99% plus. Actually, I don't think these are plus prime. That's just, it starts at this level and then it goes up based on your risk. And the lines of credit range from 0% to 10%. Requirements, you don't need collateral, no time in business requirements. You're going to need a 680 FICO score, no recent late payments or bankruptcies. You can get approved at diamondbl.com. Now, keep in mind, I'm going to give you a lot of the direct sources. I'll tell you exactly where to go. But if you're interested, you can go to creditsuite.com/get funding as well. We ask about 5 questions there. We'll get you pre-approved. We work with all these lenders and many, many, many more. We have over 1,000 lenders in our arsenal. So if you come in and say, I'm in a high-risk industry, like I'm in the cannabis industry, or I'm an accountant, well, we probably have many, many, maybe even hundreds of sources that may work for that industry. So for example, a credit repair. Credit repair is one of those industries that's notorious for not being able to get loans anywhere. But we do loans for that industry all the time because we help a lot of high-risk industries get financing. So we've got established relationships with lenders that know our clients have paid through and have good payment performance. So they entertain these high-risk scenarios when they typically don't if you're to go to them direct. So just keep in mind, I'm giving you the direct sources. We can also help you as well. And keep in mind, we never charge you a dime of money to get financing. the lender pays us like a kickback referral fee, and you get our services for free to help you through the whole process. The other cool thing is we get discounts and better pricing because we do so much volume to these sources. Go Capital with a K. Marketplace to connect borrowers with lenders, peer-to-peer. Okay, let's talk about this. This is new and you need to know what this is. This is a marketplace. There's a lot of these out there that are now marketplaces. Foundation, Go Capital. They're not a direct lender. They're not lending their own money. What they're doing is pooling together multiple lending options, and then you can go one place and get multiple lending options. Okay, this is what we do at Credit Suite. We pool together all the lending sources into one arsenal, and then that way we can help you qualify with 1,000 lenders versus just qualify for one. So this marketplace term is very important. Okay, so this connects borrowers with lenders peer-to-peer, and they also are a direct lender as well. So they lend some of their own money, and they're also a peer-to-peer. Remember, we talked about this private investor platform for private investors to lend money as well. And they can also combine the two types, some of their own money and some coming from the peers and the peer-to-peer lending. Service industries, trucking, restaurants, medical, cannabis. So again, many others I didn't mention here, but you can see that they specialize here in helping a lot of industries that are considered to be higher risk. So they offer business cash advances, merchant cash advances, 10,000 to 5 million. What these are, cash advances, revenue lending, cash flow financing. It's all the same name. It's all the same thing under different names. What this financing is it lends you money based on you managing your cash flow responsibly. So this means if your bank accounts reflect that you have more money going in than out, you're not overdrawing and you don't have a bunch of non-sufficient funds. If you manage your bank account responsibly, that's what's needed for these cash advances. Now, what's nice about cash advances is they don't care that much about credit. So even if you have damaged personal credit here, you're still able to get approved for a lot of this kind of financing. 24-hour approval time as well. Requirements, you need 10,000 in average monthly revenue. Not surprising. Okay, they're basing the decision based on your revenue. So that's why you've got to have that revenue to get approved. You got to have a business bank account, 4 months of bank statements. Most of them require 6 months, so a little bit easier. Fewer than 7 days with a negative balance per month. And you can go to Go Capital, KAPITAL.com to be able to get approved. United Capital Source, they deal with equipment financing, merchant cash advances, term loans. I've explained what each one of these means to you now, so you know when you see them through me or other sources what we're talking about. They deal with bad credit business loans for borrowers with little to poor credit history. They deal with invoice and receivable factoring. We have not talked about that yet. Equipment financing is pretty obvious. That's financing to buy equipment. Invoice and receivable factoring, when you see this term, this is referring to you accept payments from your customers on terms. So for example, here at Credit Suite, you can enroll for our business credit package for $3,000, and we let you make payments of $500 a month. But because of that, we're accepting payments on terms. We could use that outstanding balance and get financing against that because that's account receivable. So when you see invoice factoring, receivables factoring, AR financing, it's all referring to that same thing. They serve industries like dispensaries, healthcare, gas stations, laundromats, senior centers, okay, all considered to be high risk. They service those and many other high risk industries. 10,000 to 5 million available, terms of 3 to 10 years. Remember, term is very important. Term is way more important than interest rate. You can write off the interest rate and get it all back on your taxes. But getting a longer term is what's key to getting your payments as cheap as possible. So we always want the longest term as possible. Rates 9% plus, no fees, requirements, 6 months time in business, 10,000 a month in revenue, 500 FICO score, and no open bankruptcies to be able to get approved. And their website is unitedcapitalsource.com. Dynamic alternative finance. They source as equipment, real estate, working capital loans. Now, when you see the term working capital, all that means is a loan for general purposes. You don't have to specifically say what you're using the money for. It's a general purpose loan. They offer lines of credit, equipment financing, sale leaseback. This is a new term. Sale leaseback is when you own equipment free and clear. You basically sell it to the bank and then you lease it back from them. And then when you make all your final payments, then the equipment becomes yours again. So it's a way against borrowing against free and clear equipment. They serve industries like marijuana industry, alternative industries, amongst many others. Dynamic alternative finance, $250,000 to $10 million loans, 2 years time in business, business bank account. Startups must have a credit score of 700 plus. So they do have financing options if you're not 2 years in business, but you'd have to have good credit. Tax ID number, DYNALT finance.com. So that's DYN alt ALT finance.com. Greenleaf Money, funding for the marijuana industry, connects borrowers to lenders, peer-to-peer. They were peer-to-peer lender too. We talked about what this is. 25,000 to 10 million available. Application asks for personal income and major outlays like monthly housing costs. Requirement 680 FICO score. If you have a guarantor or a credit partner, that will work for you as well. And you can go to greenleafmoney.com to be able to get approved. So look, it's not easy to get funding for high-risk industries. Bank doors are closed to you. You're not going to walk into big banks. They're not going to touch high-risk industries. Unsecured business financing can work. We talked about multiple different ways you can get unsecured financing without collateral. Peer-to-peer lending works really well right now. And lucky for all of us, this is really blowing up. So it's making it easier for businesses to get money. Do some creative searching as well to find industries for your industries, or you don't have to. You don't want to do all the legwork to find the lenders. Just go to creditsuite.com/get funding. Again, we do all that legwork for you. I mean, we have somebody on our team that their only job is to be the liaison with lenders. All they do is find banks, find loans, find programs that work for our clients, including a lot of high-risk industries. So we've already done a lot of that legwork for you. Get access to every legitimate funding program in one place when you're working with us. You're never going to pay us any fees ever. Okay, we don't charge upfront fees. We don't charge funding fees, no matter what the kind of funding we're getting. Use our loan volume to get lower rates because we do so much volume through these sources. They give us price breaks, and 100% of that price break gets pushed to you because obviously you're going to get a lower rate if we're doing a volume of loans than if you're only doing one. And we develop a business blueprint. We'll help you through the process of qualifying for term loans, qualifying for SBA loans if you can. In a lot of cases with higher risk industries, it's harder to get those SBA loans. Our goal is pretty simple. You should never have to look for funding again. You should have one source, one contact. When you're working with our finance officers, they will build a relationship with you and they will be there for you through the life of your business to help you with funding all the way from startup to the point where you're looking for major expansion capital. Feel free to give us a ring, 877-600-2487, info@creditsuite.com. Get approved at creditsuite.com/get funding. If you're listening on iTunes, you like what you hear, leave us a review. If you're watching on YouTube, then give us a like, give us a subscribe. This is all we're talking about all the time, is all the ins and outs that you need to know to get money no matter what your scenario is to be able to grow your business. Thanks everybody for tuning in. Don't forget to check out our website, creditsuite.com. The top right of our page, you will find our social links where we go live on Facebook weekly. We go live on YouTube weekly. We also have daily tips on our sources such as Twitter, Facebook, and of course, you can listen on the go with our iTunes or on iTunes. Thanks everybody for tuning in. Have a great day.